friends, this is Martin from Secret, the channel for learning about trading and investment. Welcome to the daily market analysis show where we look at what happened in the market today and how we can plan for a better trade tomorrow. So this is for November 2nd, 2021. If you're not subscribed, subscribe and share it to your friends. Hit the like button if you like the show. Thank you very much. And what did we have today? Market bounced from the support. We had discussed a similar action to take place yesterday's weekend analysis, but will it sustain? Let's see. So pre-market analysis show for November 2nd, 2021 would look at all of these parameters that you see on the left side of the charts, and we would also do data analysis on the open interest, volatility, institutional participation, sectoral performance, and global commodities, and then wrap up with some X levels. So price patterns, what does it say? Nifty bounced from support zone nearly 1.5%, 250 points and more, and then closed above the previous day's high, right? Previous day's low high is just close above that, and it closed at a resistance zone. This is a resistance zone. You'll see that next months. BANKNIFTY also did the same, 1.66%, 648 points closed above the previous day's high, right here. Previous day's high above that close, and this is support zone. This is also moving average support, Fibonacci support, and the previous resistance zone support. Apart from there, this is also Fibonacci 23. Change in polarity bounds is what looks like might have happened, right? So Nifty and the BANKNIFTY stayed more or less flat in trading. This is the 15 minutes Nifty, this is 15 minutes BANKNIFTY. Look at what happened. It stayed more or less flat till in the first few hours, and then in the afternoon it just traded up. Same, it consolidated a little bit, right? Small V's or range mode moves in the first few hours, and then it traded up. BANKNIFTY also, so 1.5% of up move bounce from a support zone would happen. The Bollinger Bands, if you look, Bollinger Bands has got a median, an upper band, and lower band. So the BANKNIFTY has taken a support in the median of the Bollinger Bands, and then it had taken the support yesterday and has further bounced up from there, while Nifty has fallen off from there and it is facing a resistance at the moving average median band of the Bollinger. Another thing to note is that the volatility has not contracted after the expansion that has happened, despite all this fall, although it may be slightly showing some consolidation signs on the bands, but it does not show any contraction. That means big up moves and big fall downs can still happen as long as that contraction has not happened. So that's my price action. The support resistance levels you can see in the left side, you see Nifty, or right side, you see BANKNIFTY. You can see that it is at a resistance zone. After the bounce from the support, it is at a resistance zone, which is 7950, 18,000. 18,000 is what it has to move on. That is where it is facing resistance, because it was a previous support zone. Now it is actually a resistance. And above upside to that, then you have a 23% retracement resistance at 18. This is not a retracement, it is a 23% Fibonacci projection, which is a resistance 350, 18,350, 450, and above that you have 18,650, which is all time high. 18,600 is all time high. Then above that 8950, don't need to worry about that. And downside you have the support first from where it bounced up, which is coming to near 17,600 levels, and then if that's broken and that 17,600 and 550, that kind of level is also a Fibonacci retracement level of 23%. That's broken, then it goes on to 17,250. Before that it can take some support at 17,350, 450, 400 that levels, and then if 250, 17,250 also is broken, it goes to the rounding number 17,000. Right, so that's the resistance and support. On the Nifty right side, BANKNIFTY, if you see, it is currently taken a bounce from the previous support zone of 39,300 and 39,500, and then upside resistance you have 40,000, which has to be conquered. After that you have 41 and then 43. Downside, the first support will be 39,300, 500, 39,300, 500 where it bounced from, and then We have also the Fibonacci 23 level, right, which is coming to 39,000 levels. So 39,000 is going to be a good support. If it falls down and below that, you have 38,500, 400 that levels, right? After that, you have 38,000 levels and then 37,800 levels. So all supports downside if it falls. So that is resistance supports. Now momentum, price momentum, you can see that we had seen the other weekly analysis that we have a weekly divergence which is bullish in nature. The price is moving up and the momentum is moving down. So this is shown that it is working and confirmed, and it seems that the target can go back to the 18,600 all-time high if it works out fully, right? So there is a weekly basis momentum divergence in play. And daily wise, if you see the momentum on the short term, daily is it has lost the momentum to the sideways from the previous rounds. Now it has climbed up. This is at the resistance 60 level. So it has to move above that to say that the momentum is back. Even short term momentum is lost on both Nifty and Nifty. This is Nifty, this is Bank Nifty. Both momentum has slipped to the sideways, so it has to catch up. But weekly bullish divergence is something that we have to be optimistic about. Trend indicators ADX is showing that the trend has bent here and then now again it is bending and moving up. That means the strength of the trend is slowly getting back to normal. But the DMI negative is dominating. That means the bearishness is what the overall trend in short term is. For Nifty, same band shows the bearishness, but the thing is it has not taken a bend. It has taken a bend and fallen down. It has not taken a reverse trend. That means strength as of now is weak, is weakening, falling, and is in the bearish zones. VIX volatility. VIX, India VIX moved down 4% and settled 17.2 kind of range. The implied volatility of Nifty 16.37, ABP is 38.45, right? Seems to be rising upwards, right? As you know, it could move, more the ABP moves up the battlefield option sellers. Trend indication we had already seen. Volatility we had seen. Open interest data analysis is what's on the left side. You can see that this is for the November 3rd, Thursday day or Wednesday expiry day after tomorrow. Triangulated week this is, and this is Bank Nifty on the right side for the expiry of November 3rd. So you can see that there is a lot of put addition has happened here, right? Today, change in open interest is seeing a lot of red, which is puts. There are also a lot of support has got returned. Put writing has happened more, but overall you see that it is bearish because it is facing resistance 18,000. It's very high resistance at 40,000, right? So Nifty has got highest support at 17,800, which is returned today, and then 17,700 also is having good support. Resistance upside 18,000 is the biggest hurdle. After that, you have very far away hedge 19,000. This is because of the people taking the cheaper hedge that you have such 1,000-point difference in Nifty for the expiry that is coming day after tomorrow. Put call ratio is not bullish yet, so 0.72, and a long build up in the future is what happened in Nifty. But Bank Nifty, you can see that 38,000 and 39,500. There are also huge differences there, right? So Bank Nifty has got more gap in the put writing. So higher support and 1,500 points of difference between 38,000 and 39,500. But resistance upside is 41,000 and 42,000, which is good, which made big resistance. And short build-up is what happens. So certainly 0.82 is not, the put call ratio is not that, is bullish. The put call ratio is bullish as compared more bullish, but futures short build-up is what happened in Bank Nifty as compared to previous day. It was the other way. So Bank Nifty slightly showing bearishness from the trend and the open this side. I said that Nifty is going, but both not Nifty and Nifty both are showing a lot of put writing. Supports have got build up today. Sectoral performance, if you see IT, almost all sectors shown some sign of reversal from the bottoming out, and IT has shown a 2.4% of up movement. We lost the short-term momentum last week and still sideways. Takes some time to catch that up. Not away till then. Metal also gapped up. Metal actually gapped up. Did a gap up, and this is a mistake. It's not closed red. It's closed green. Right, 3% up move happened in metal, but momentum is need to catch up. So all the sectors close green with up move. Right, this is 3%. This is 2.4%. Auto is 1%. Pharma is 1.2%, FMCG is 1%, and reality is 4%. So a big reversal in almost all the sectors can be seen evident, but the thing is the momentum, price momentum tends to catch up. It has gone down to sideways, taken support from the 40, almost all of them. And then now it has to catch up. It takes a couple of days if at all it is going to catch up. Institutional participation for today is interesting because FI, even after selling 5,000 crores of data, look at yesterday selling 5,000, more than 5,000 crores of data. Today also they sold little, very little, very small. They will not turn a buyer. Today also they are sellers. But domestic institution also did not buy anything. Probably they are waiting for the outcome of the Fed demand or something like that. We don't know. But institutional participation is very poor. Continue to be poor, which is a concern. Dollar index, you can see on the right side, it is turned green the previous Friday. Today it is shown some bearishness. Basically, it is attempted to break the resistance, which is going a bit off. 75 plus, it is resisting that 75 plus levels, and it is trying to fall back in the channel. And today is also another indecisive consolidation around the resistance. So that's what you see on the dollar USD INR currency pair and NSE trade. Crude oil is crazy level again, 83.6. It's going crazy up with great momentum and multi-year highs. God knows where they're going to end up. Petrol and diesel prices are rising each day. Dollar is strengthening each day, rupees weakening, and that is not good news. Along with the FI, selling is happening, and tapering news is going to come out in November. Right, dollar is going to further strengthen. Probably. Right, so gold, you can see that it is at a very comfortable place on a previous major support zone, and it is multiple times it is trying to break out of this channel top, trendline channel top, and eventually it may do that also because it's a compel handle right now with high time frames. And the US markets are showing no major indication of a downfall or up more as of now. We got to check that pre-market to make sense out of that. Actionables is a repetition stock of ICICI on the right side. As I said, it's a swing or a positional trade. There is a gravestone doji on the weekly, so you have to be cautious. But that also indicates that you can give a pullback for a right entry to be made to gain some swing positions because momentum trend and reverse divergence bullishness and the breakout could continue further. Is what the charts are saying. The left side intergroup lobbying is having a inverted head and shoulder pattern on the daily and weekly, so that has already broken out of the previous resistance zone and this retraced a little bit with very violent moves for some reason. You have to be cautious to have the put stop losses ready because look at this candle size is huge on the daily. You have to be cautious. It can be only positional trades with tight stops below the neckline. And but it's the breakout from the from this inverse head and shoulder pattern has happened, and it has good potential to move further up as per the charts. Momentum is also good, trend is also good, volumes are above average high, but be cautious of the volatility. So that's what ICICI Bank and Interglobal Aviation to stock picks for positional or swing trades for this week. Now just to wrap up the short term view on the indexes and overall the markets remains mild bearishness still or neutral combination of this neutral or just cannot be bullish yet because reasons are listed down last week. heavy. So even today there is small selling, but remember that institutions are not finished off their selling even after selling 5,000 crores. Right? So that's not encouraging. They are not buying great. That's why they did buy good amount of 4,500 plus crores, but this institutional heavy selling is a concern along with the crude oil and the weakened rupee. The Fed tapering meeting in November is news is supposed to come out by Wednesday our time, and that uncertainty also is there. The reason why I'm mildly bearish. The charts are showing that short-term momentum has slipped, and it may takes few days or never know how long it takes for it to catch up to the bullish zones and settle. So that has not happened as of now. So these are three reasons why there is bearishness still there. Now, why mildly only bullish is because it's a triangulated weekend 15 mood is there, Diwali, and so it could best be only a consolidation, not a crash at this festive mode. And the weekly bullish was is in progress, confirmed, and it's in workout. So that can indicate that the bounce that happened today may continue as per the divergence chart. But divergence charts, reverse divergence from divergence need not always meet the target. It may not always fully work out, right? So it can fail after working out for a few days or one day. All this can happen. But that gives an indication that there is a potential for the bounce to sustain. Charts showing that the support zones changing polarity bounce and from the Fibonacci level at a BANKNIFTY moving average level, and all this has happened after the 5 to 6% of correction that has happened on the index side. So that is also another reason why it is only mildly bearish. Right? The last 2 points is a repetition for the option sellers and option traders, basically because it's dependent on the volatility. Volatility range is is between 16 and 20, 15, 16, and then 20. So it's moving around that. So it falls down to 15, 16 below, and then moves back to 18, like it did last week. So last week it was very volatile on the VIX. Right? It went and hit 18.5, then went and hit 16.7 that level. So and then finally settled 17. So it went up and down and settled mid. Today it fell down 4%, suddenly cooled off and market rose up. So this kind of choppy moves are very difficult to trade for intraday traders, especially even for swing traders also will have tough time doing the adjustments on option trading. So counter spreads could work out of these Vega spikes, and taking vertical spreads into making also always helps. Right? We use option strategies like fly and double calendar and all of these to avoid big losses and have your risk limited as per your risk appetite. So of course, so that's a wrap up of what my market view for tomorrow. I hope this helps you to form your own trading plan and in sync with your view on the market. If you like it, consider hitting the like button and subscribe yourself if you're not done, and share it to your friends and colleagues. Thank you so much for watching. Happy trading, happy learning.